Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend Podcast. Top of mind for us this week, the American consumer. U.S. consumer confidence eased this month on a more muted outlook for business conditions. Walgreens slashed its fiscal year forecast, and jobless claims, they rose to the highest since the end of 2021.
Okay, all that being said, Americans are still spending on their cruises. We check in with the CEO of Carnival after the company raised its full-year earnings outlook. Strong demand for cruises helping Carnival post a surprise profit last quarter.
And Tim, speaking of big ships,
okay,
Elon Musk is going to need a really big one for his own growing family. A deep dive into his obsession with population decline.
I think he can afford it.
You know what he wants? He wants us all to have more babies.
He does. Hey, it's not a V6 or a V8 or even a V12.
Okay.
How about the $4.1 million hybrid supercar with a V16 engine?
All right, all of that to come. We begin with the wealthiest person in the world, at least depending on the day. He's up there, though. He has spent some 4 decades building up the House of Arnault and the clothes and accessories that signify status among the global elite. You know, brands that include, of course, Louis Vuitton, Christian Dior, Bulgari, Celine, Fendi, Tiffany, and a few more. He's not done, though.
And with more on the new monthly issue of Bloomberg Businessweek, we welcome in the editor, Brad Stone. He's also the author of Amazon Unbound and The Everything Store. He, too, along with Bloomberg's Angelina Rosquet, wrote the cover story, now available on newsstands, on the Bloomberg Terminal and at Bloomberg.com/Businessweek.
Businessweek is now a monthly magazine, right? That's perhaps unusual, but it's a 100-year-old brand that stands for examining the biggest companies and names in business, and we continue the tradition every day on Bloomberg.com and now in the monthly magazine. This is a magazine that I think will surprise a lot of people. It looks different, it feels different, it's thicker, and our mission is to put a critical, significant force in business or tech or politics or economics on the cover every single month. And as you say, this month it's Bernard Arnault. I did not know a lot about him before starting this journey, but as you say, one of the wealthiest people in the world, $210 billion, has fallen a bit since the French parliamentary elections.
Right.
I think he'll be just fine. But he's now the 3rd wealthiest person in the world, and I think not very well understood.
Well, it's interesting that you mention elections because politics actually plays a big part in his origin story. So just sort of get into that a little bit.
You know, it's interesting. He grew up in the north of France. His father ran their family's manufacturing business, had a small real estate component. He, highly accomplished, went to the best engineering school in France, joined the family business, got his father to reorient towards real estate, moved to the U.S. after the left won the French elections in I think the late 70s or early 80s. You're testing my knowledge here of French history, and really didn't do so well in the U.S., but woke up to the possibility of these small little luxury houses, often family owned, Christian Dior, Louis Vuitton, that weren't really being run as businesses, but were being more run as kind of cultural artifacts. And he was very opportunistic. He bought the company that owned Christian Dior out of bankruptcy in the early 80s and has been on an acquisition tear ever since, buying companies sometimes through sort of leveraged buyout means and assembling this huge empire.
Great story, though. I mean, Tim and I have been talking about this offline about Christian Dior and a New York cab driver. Can you tell us a little bit about that helped him kind of think about,
well,
right?
He tells the story, and it has moved into mythology or legend.
Lore,
but
right?
Apparently when he was a college student in the U.S., he asked a cab driver at JFK, do you know the name of the French president? And the cab driver did not know, but knew the name Christian Dior. And that, he says, sort of awakened him to the cultural resonance of these brands. And when we think about names like Louis Vuitton, Bulgari, Hennessy, Tiffany, which they recently acquired, it is interesting. I mean, these are brands that have done extraordinarily well in China. In a way that the Chinese luxury brands have never been able to do. And he's tapped into something that I think is true about this lifestyle and European tradition.
Well, I want to go to China now, because when he went to China in the early 90s, he tells a story of what he saw there. It's a far cry from anyone who's been to one of the mega cities in China in this day and age and seen one of the businesses that the company owns, perhaps on the famous street in Shanghai where all the luxury brands are. What did he see in China in the early 90s that gave him an indication that this is going to be a killer market?
Right. Well, we asked him about that. And in fact, I think the answer to that precise question was there was nothing. He was very skeptical. He said that one of his memories was that everybody was wearing Mao suits. And, if you've got a luxury business and a fashion business, you're probably like, is this the right place for me? And also at the time, the Western brands were confined to hotels, tourist hotels. So they were operating a Louis Vuitton store at the bottom of like the Palace, in the basement of the Palace Hotel. But obviously, he has ridden and been aggressive in exploiting the rise of China and China joining and not just China, but lots of countries in the Middle East and in Asia joining the global economy, the concurrent rise of an affluent class, and then the psychological need, it's so interesting, of people who are newly rich to feel like they're a part of, that they're distinct from their fellow countrymen, they're part of a global affluent class, that they feel special.
Right.
And he's just tapped into that need and sold a lot of handbags.
I thought that was interesting too, that you got into, like, he understood the power of logos, luxury logos in particular, right? And really understood that, kind of gave a marking to somebody who maybe was successful, but by having that logo kind of just cemented that position.
I think there was one point in the company's history where they were arguing that the Louis Vuitton monogram had ceased to be relevant. And you fast forward today, I visited Paris for the story, and next to the Louis Vuitton flagship on the Champs-Élysées is a new structure that they're renovating. We don't know what it's going to be yet, and they've covered it in a sort of monogrammed facade. So it looks like a big Louis Vuitton trunk. And the number of tourists who flock to basically a building under construction to take pictures talks to the global resonance of these marks. And you couple that with the way in which he has exploited celebrity, Pharrell Williams at Louis Vuitton, Jay-Z and Beyonce at Tiffany, go down the list. Rihanna started her own brand inside LVMH. And the way, celebrities flock to their shows, there's a reciprocal relationship, the celebrities posting on their Instagram, bathing in this aura of opulence that Arnault has created. It's about the marks and the monograms. It's also about celebrity and a lifestyle that people aspire to.
He understands that. He understands social media. He's not on social media, though, right?
It's funny, all the kids are, and
he's got,
except for Delphine, the oldest daughter's not. The 4 other kids are, and Antoine, the oldest son, said, he's on it, and he monitors, but he's not posting. And they tried to get him on Twitter at one point before it was X, and he was apparently reluctant. So
you met him. Tell us about the meeting and meeting him for the first time.
Well, this might surprise you, but he was better dressed than I was. It's exquisite, right? I mean, the way he holds himself, the way he dresses, to me, he was very French. I was probably very American, but he was generous enough to do the interview in French. My colleague Angelina Rasquet and I interviewed him, and just extraordinarily patient. I got the sense that he enjoys talking about, like, we were not there to press him on succession, on what the next company he's going to buy. I mean, we break some interesting news about that in the story, but we really wanted to know, tell us, share your stories. Tell us how you built this business, how you think about operating 75 disparate houses together. What are the synergies? What was it like, visiting China recently, where in contrast to the first visit, throngs of people are out to see him and asking him to bless their babies. And so, I feel like he got into it and had a good time with us. And then just sat for this extraordinary photo shoot with Reuven Affendor.
It's gorgeous.
And which, makes for a really beautiful inaugural issue of the monthly Business Week.
Okay, we'll talk about the succession element to this in a few minutes. But before we get there, I just want to learn a little more about his empire, the real estate portion of this. Because yes, he's known for these luxury brands, these luxury houses, but it's also a real estate company.
That's right. And another one of our colleagues, Natalie Wong, on the real estate desk here at Bloomberg News, really helped us with this. I would say it probably started more modestly a decade or two ago, buying real estate in Midtown Manhattan, on Rodeo Drive in LA. LVMH has a separate arm, sort of an investment arm, L. Catherton. They did a lot of deals through that. And over the time, it's gotten more and more aggressive, where they're now designing whole new shopping districts in cities like Miami, in Montreal, where a whole new luxury district is underway with LVMH as the primary backer, in Asia. And it just gives, well, first of all, Arnaud, a number of ways to win, not just on the sales, not just on the rent to rival companies who take store space, but on the underlying appreciation of the asset. Right. It's an extraordinary amount of power, because, we talk to rivals who say, if you're in the prime spot and LVMH wants it, maybe they're the landlord and you say goodbye because they're going to take the space from you, or the landlord is so intimidated by LVMH and its power that they force you to leave. And then we asked Arnaud, do you have too much power? And, his response is hilarious. It's along the lines of, well, if they're complaining, they're not very well managed. So he's got no sympathy. But this is a company, we talk about the advantages of the tech platforms and the power that they have to cast winners and losers. And I thought with this story, I was writing about the opposite. A figure in a company that has amassed business power in another way. But I think it's sort of the same. I think the real estate is the platform, and they own the platform, and they pick winners and losers and can anoint themselves by giving themselves the primary location, perhaps, discounts on rent, or it's just like the muscle to go and say, the corner of Fifth Avenue and 57th is the luxury capital of the world. They own 3 of the 4 corners now.
It's pretty amazing. It's pretty well. So you talk about that power, right, in terms of this, boutique of brands, if you will. And I just wonder if regulators, though, think, okay, is there too much power? Is that a risk at all as he continues to buy more and more brands?
I don't think so. There's we highlight some deals that are now being looked at in the U.S. They're not LVMH deals, right, but different sectors of luxury. But it's a different set of regulators. There might soon be a different government in France. I probably don't know enough. I mean, I would sort of speculate that they would face more problems from a leftist government than a rightist. Right. And that does seem the direction that France is drifting in now. But one of the nice tantalizing tidbits at the end of our story is that he has acquired a personal stake in Richemont, which is the owner of Cartier and some other brands. And he says he wants to maintain its independence, but this is how it starts with him, how he went after Hermes and Gucci famously, that he is not, even though he's 75 years old, done with his empire building.
The wolf in cashmere is how some inside luxury circles have referred to him. You write about him laying off thousands of people after acquisitions. What's his reputation within the industry?
Yeah, I would say, well, first of all, the layoffs, that was early on when, he was acquiring some of these brands as part of, like Dior, larger companies with a lot of inefficiencies and paring down to just the luxury assets. The wolf in cashmere was a phrase started by, I think, folks at Gucci and then later at Hermes, and the way in which he uses leverage buyout techniques to go acquire assets. I think he's viewed as a intimidating figure who brings pretty ruthless takeover tactics and business tactics to the world of luxury. But I think there's also a lot of admiration and respect for what he has achieved. I think at one point maybe there was a colder view of him, but how can you not admire right now, and particularly now that he's been a major philanthropic force in France and he's sponsoring the Olympics. There's probably more of a halo now than there ever has been.
Just last question: what do you think people might be surprised about him in your coverage of him in the reporting that might be surprised to find out? I know we covered a lot of ground.
Look, I mean, if you're a follower of this world, there's some stuff in here that will surprise you. If you're not a follower, if you're even a sort of quasi business informed person, you might think that Bernard Arnault is married to Selma Hayek. He is not.
Exactly.
That is one of his rivals, right? And so I think, but a surprising number of people have some of those, impressions. And so, and his wife is a concert pianist, extraordinarily impressive. So to understand who he is, his 5 children who all work in the business are also accomplished, and to understand how he has built this empire and the ways in which he now leverages his power, I think, is going to surprise a lot of people.
Brad, we lied. One more question, because you mentioned the children. I promised we'd talk about Succession. 5 kids, very briefly. Who should we be watching?
Yeah, I mean, all of them, right? Because they're all remarkable. Delphine, who runs Dior, is the only daughter, the oldest daughter. She is the sole descendant on the executive operating committee of LVMH. So I think you'd have to say, like, she's got, she's probably, if we're going to talk about it in a race, and I don't know that they do, she would be the natural. But the way in which his youngest, Jean and Frederic, are getting increasing authority. Alexander, who now co-runs Tiffany & Co., and then Antoine, who is a non-executive chairman of Laura Piana and runs all the image and communication for the company. They all have their pieces, and my impression, by the way, in closing, is that like people we know well, even though Mr. Arnault is of advanced age, he has no intention of stepping back. He is in it for the long haul.
And if you're playing tennis with him, do mention that rival, because it might give you a little bit of an advantage. Anyway, read the story.
Just don't wear Nikes in the store.
Do not wear Nikes in the store. Incredible. Brad Stone, congratulations. The new launch of Bloomberg Businessweek, now a monthly. Brad, of course, the editor of Bloomberg Businessweek. Bloomberg Businessweek now on newsstands, online, and of course, always on the Bloomberg terminal.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
All right, now to an individual who is often the subject of a Business Week story, including recently. We're talking about Elon Musk, and to some numbers you should know about Elon.
Okay, 6, it's the number of companies Elon runs. 216, it's the number of billions of dollars Elon is worth, as of our taping at least, according to the latest calculation by the Bloomberg Billionaires Index. And 12, it's the number of kids that Elon has, at least that we know of. No question, Elon doing what he can do to contribute to the population, which makes sense if you've paid attention to what he said in recent years.
Well, I got to tell you, I'm one of 7, so my parents certainly did their jobs. Well, in Musk's mind, global fertility rates are not just a crisis, but the crisis. In 2022, he tweeted that, quote, a collapsing birth rate is the biggest danger civilization faces by far.
For more, we turn to Dana Hull, Bloomberg News senior technology reporter.
He's been sort of ringing the alarm bell about this for quite some time. If you look at his tweets and all of his public appearances at the Milken conference, he really sees this as a big crisis. And I think it has a lot to do with the changing demography of the United States and, frankly, his interest in colonizing Mars. And he's looking at trends and his own goals. And, he really is encouraging people to have at least 3 children. But I think that the sort of deeper thing here is that he's not just tweeting about this on X, the platform that he owns. He's really putting money behind it.
I would say, as a recent father, if he wants people to have more kids, he should talk to the folks in Washington about childcare costs and the difficulty in raising kids.
Says the father of 2 young kids.
I'm serious, though. I mean, if he wants people to have at least 3, there's a reason why people don't have as many kids as they used to.
It's expensive.
It's very expensive.
There are a lot of reasons why the fertility rate has fallen. Women are having children later in life. It is incredibly expensive. We don't have the nuclear families we used to. People are thinking about things like just the cost of childcare and the cost of college and the cost of just living and the cost of housing. And there's a lot of reasons why in a lot of industrialized countries, not just the United States, but in Scandinavia and Japan and South Korea and elsewhere, that the fertility rate has fallen. But, there's a lot of policy levers that you can push if you want to encourage families. And, instead, Elon has quietly donated $10 million to the University of Texas at Austin, his largest donation to higher education to date. And he's also funding a documentary film that'll feature like the professor that he's funding. And so it's just super curious to me how, on the one hand, Elon is very public about his intentions, and yet seeing him get involved in academia in this way is sort of a new realm for him.
Well, that's what I wanted to ask you, Dana. I was listening to you, is Elon mostly talking his book here, about wanting to, develop Mars and all that good stuff? What do the academics say when it comes to what's going on with fertility rates and perhaps populations more broadly? What does academia who study this actually say about what the problem is or lack thereof?
Yeah, so the field of demography is a super fascinating one, and my colleague Sophie Alexander really did a heroic job talking to all of the experts here, and they are very worried that Musk and his megaphone and his money are kind of now influencing the debate, if you will, within the field about just how serious this crisis is. I mean, simultaneously we're seeing a lot of talk about no-fault divorce and abortion rights, and we're seeing women's reproductive freedom being scaled back in state after state. So there's just a lot of history here that is very concerning for people that have been in the field for a long time.
I think one important part of the conversation, at least here in the U.S., that Carol and I have talked about, Dana, is even though Americans are not having as many kids as they used to, a lot of the jobs that need to be filled are being filled by immigrants right now. And that's really important when you talk about the economic context here in terms of population growth and aging population and who's actually doing jobs.
Oh, absolutely. I mean, who is growing the food in the United States? Who is working in our meatpacking facilities? Who is taking care of your elderly parent? I mean, so when you talk about declining birth rates and fertility rates, you have to, if you look at the world population as a whole, to be clear, we are still seeing population growth. There are different projections, and projections are often wrong. I mean, we know that people have fewer children during the recession. So what's actually happening now is that there were fewer babies born in 2007, 2008, 2009, when we were in the depths of the last recession in the United States. Now all of those kids are about to graduate from high school, and you're seeing a drop off in college enrollment. So there are definitely real world impacts to population changes. But when you include immigration and you include the world as a whole and not just the West, we are still on track to be growing people. That is a fact. And so it's just very interesting to sort of look at how, this kind of fringe movement called natalism has increasingly entered the mainstream.
Dana, does the world at large, does the Bloomberg audience kind of need to keep the head of PWI, Dean Spears?
The Population Wellbeing Initiative.
Exactly.
Yeah.
Do they need to keep him on their radar?
Yes, he's coming out with a book in the fall by Simon & Schuster, 6-figure advance. I mean, it's called After the Spike. It's kind of, it'll be like a mainstream book, kind of espousing, I think, a lot of what is in line with Musk's thinking, that we need to really be paying attention to fertility trends. And I think it's just important, billionaires have a lot of ways to spend their money. Musk has a foundation. His foundation is now donating to academia. I think that's really significant and something that investors and customers and people in general should be watching.
And it also said that one of his researchers are going to be joining, I think, President Biden's Council of Economic Advisors, right? So, yeah, it's kind of spreading out.
But Dana, this is also a story about Elon's businesses, because he has had kids with people at his at least one of his companies in the past. So we should note that even though we're talking about what could be his personal views that he's increasingly talking about on X and on podcasts, this is coming out in the work that he does too.
Yeah, and there are a lot of, to be clear, these are consenting adults.
Yes.
But, one of them is currently, his employee. I mean, she's an executive at Neuralink. And so, obviously, a couple of years ago, Business Insider broke the news that Musk and Siobhan Zillis, the executive at Neuralink, had twins together. They also had another child that was previously unreported. So this is definitely like a pattern of his. It's just sort of unheard of that you would have that going on, I think, in most quarters. But it's a pattern that's been established, and it seems to be continuing.
Well, it's an incredible story, and I think a really smart one, and just kind of getting into it and explaining it and doing the research and giving us the facts, certainly when it comes to fertility and what's going on globally.
Also, as Carol reminded me, some incredible animations on the terminal.
It actually made me kind of laugh.
Check it out, everyone.
Dana, have a great weekend. Bloomberg News senior tech reporter Dana Holt.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Earnings season in all its glory doesn't kick off for another few weeks, and yet thanks to quarterly earnings from one big player in the hospitality and leisure space this past week, we got a pretty good read on what's up with the U.S. consumer.
Carnival raised its full-year earnings outlook after strong demand for cruises helped it post a surprise profit last quarter. Adjusted earnings before interest, tax, depreciation, and amortization will be about $5.83 billion this year. It's up from Carnival's March forecast of about $5.63 billion and above the average analyst projection of $5.7 billion.
Record-setting demand is helping cruise companies sell tickets at higher prices, partly driven by the value of sailings versus land-based travel helping to attract new customers. That trend appears to be extending into 2025, with Carnival's booked position for next year already ahead of 2024 levels on both occupancy and ticket prices.
Carnival turned just its second profit since 2020 in the second quarter, reporting 11 cents a share against an expected 2 cent a share loss. Sales also beat Wall Street's forecast. S&P upgraded Carnival's debt rating to BB after the results, leaving it now just 2 notches away from investment grade. The stock having a big bounce recently, up nearly 20%. We got more from Josh Weinstein, President and CEO and Chief Climate Officer of Carnival.
We just wrapped up our second quarter, and we were able to report record revenues, record yield, record per diems, record EBITDA, and record operating income. So that was a really big quarter for us. And the best news about it is that was the actual results. But from a bookings momentum standpoint, as you were saying, the bookings that we took in just in the second quarter actually set another record. And it was the record for the most bookings we ever took for the forward year out. So in this case, 2025. So as stellar as 2024 is looking when it comes to the demand profile and the booking trends, 2025 is already shaping up to be even better.
So you can pack up your bags, go home for a year. No, I'm just kidding. Hey, talk to us about...
Maybe go on a year-long cruise.
Go on a year-long cruise. Hey, how broad-based is it? Break it down for us. You guys have several brands, and I know about a year ago you did a restructuring when it comes to those brands, but how broad-based is it in terms of customer segment and geography?
Yeah, the great thing is it is exactly that. It is broad-based. So we're seeing strength on both our North American brands and our European brands. To put that into perspective, the past quarter, the second quarter, because we're a portfolio of world-class brands, brands are coming in and out of different economic cycles, different geopolitical issues. And whereas a couple of years ago, we were talking about our European brands just taking a little while longer to catch up than our North American brands coming out of our pause. In the second quarter of this year, their yields were up over 20% year over year. And so we're getting this momentum across the Atlantic and from all segments, be it contemporary, be it premium, be it luxury. We're really seeing strength in what we have to offer, which candidly it isn't surprising to us because, first of all, as we've talked about before, we are an incredible value. So even though we've been successful in really pushing on that demand and getting our pricing up, we are still an incredible value versus alternatives. And not only are we an incredible value when you look at our alternatives, the service levels that we provide are unmatched. And they're just as good as they were from before the pandemic, which is not something that a lot of hospitality outfits can say.
I'm wondering about the trends that you're seeing when it comes to onboard spending, excursions. Are there any signs of lower spending once consumers are on board, or are there any signs of weakness that you're seeing anywhere, Josh?
Excuse me, no, not particularly. In the second quarter, our onboards were up about 4% per diems year over year, and as you know, last year was up incredibly over the pre-pandemic period. So, the trends that we look at to understand the strength of our consumer, we've got the results, we've got the onboard spending in real time, we got the bookings, and all of those metrics for us are telling us that our consumers are incredibly strong. We've got incredibly strong brands that really resonate with the segments that we're going after. And people are absolutely still willing to spend on experiences. And that is exactly what we offer. Great experiences to create memories and happiness for a lifetime.
Hey, Josh, one of the numbers that struck me too is your total customer deposits reached an all-time high of $8.3 billion. That surpassed the previous record by over $1 billion, $1.1 billion to be exact. Does all of that turn into revenue that shows up ultimately on the balance sheet? In other words, are there cancellations that can happen? What do you see around that?
Yeah, there are cancellations that can happen, but the vast majority of that is going to come through ultimately in revenues. So that's a bit of a forward indicator of how we're doing. And that increase is really a combination of increased pricing, us elongating the booking curve, so taking bookings even farther out than we had even just a year ago. And, we're doing a better job of bundling our offerings so that people can spend in advance of the cruise, not just for the ticket price, but certain onboard experiences. So it's a combination of those things that we've been very focused on that are attributing to that increasing customer.
Well, that's something we've talked about, right? All of the bundling that happens before they even step on a ship, and that ultimately can lead to more spending. Because that thinking of, I've already paid for everything, right? And you get on ship and you're like, wait, I can still spend. Like that really works.
It does really work. It does really work. I mean, it's a good amount of time that goes between the initial purchase impulse and then getting on board. So having what we refer to as a second wallet available is real. And actually, folks who buy something of onboard spending before they get on the ship, they spend more on board than those who don't do anything in advance. So it's a very strong opportunity for us.
Okay, Josh, I'm wondering about pricing pressures that you may be facing at the company. You're talking about consumers who are out there spending. That's certainly strong. What about where you have pressure? Food prices, labor costs, fuel costs. What are you seeing on that front?
Yeah, the good news is there's been the deceleration of inflation. We don't see disinflation, but we certainly see a deceleration, which is encouraging. I think if you look at our P&L, you'll see on the crew and labor side, our teams are doing a real good job of trying to be mindful of the P&L and certainly pay a good living to people, but doing so efficiently. The biggest things that we see as a change from pre-pandemic times to now is probably, that combination of two of the things that you said, food and fuel. Those are inherently more expensive, and we're doing our best because those are always going to be inputs into our business. Mm-hmm. We are laser focused on reducing consumption because no matter what the price is, if we use less, we will be better off. And so I'll give you two examples. On the food side, we are looking every which way we can to cut the amount of food we put on board, cut consumption, to be more mindful of the fact that we've got a lot of food waste in any given year. We've actually, because we put this focus onto it, we've been able to cut our food waste by over 40% per person per day versus where we were before the pandemic. And that is because we are giving so much thought to reducing the whole consumption cycle while still giving guests everything they want, but just being more thoughtful about how we do that. And on the fuel side, not only is it good for the environment, it's good for the bottom line. And even though we are over 30% bigger today than we were in 2011, we actually consume 10% less absolute fuel than we did back in 2011. We emit over 10% less absolute terms greenhouse gas emissions than we did back in 2011. So by being laser focused on that, not only can we be good, world citizens, we can make a huge impact on our bottom line.
Hey, speaking of being laser focused, you guys still have, I think roughly, I was looking at the Bloomberg, maybe around $30 billion of debt still on your balance sheet. I think $4.1 billion maturing by year end. How might the bookings and the outperformance there maybe power help with debt reduction? Like, what's your plans on that?
Yeah, absolutely. That is, when it comes to our capital structure, priority one, 2, and 3 is reducing that debt balance. We've actually reduced it by $8 billion versus our peak, which is great. I predict we probably got another $1 billion or so to go as we get through the remainder of this year. That should get us to leverage metrics heading towards about 4.5 turns, which is a big inroads versus where we were just a couple of years ago. Now, what we see as a plan going forward is, in addition to the fact that our increased EBITDA and better business is going to help our metrics and help the shape of our balance sheet, we have intentionally reduced our supply growth, our pipeline of new builds in the medium term. And so we're looking at a profile with only one new build coming in 2025, none in 26, and then one in each of 27 and 28. What that does is it will allow us to take billions of dollars of free cash flow each year for the next several years to pay down debt. And that's exactly where we're focused. You know, I was a treasurer for 10 years, and we were an A- company. I know the power of having a fortress balance sheet.
Hey, Josh, I don't want to belabor the point here, but we're hearing over and over again from people not like you that they're starting to see some cracks form in the consumer. We're seeing some price wars happening in fast food right now. For example, are you seeing weakness anywhere in your business or anywhere in the consumers that you deal with?
You know, at a general level, no, we're not. We see the demand profile is incredibly high, and I attribute that not just to the value gap, not just that we're getting better at what we're doing, but if you think about it, you just put yourself in the minds of a consumer. If they are stretched, if they are looking to figure out, how do I make my vacation dollar go further? That is playing into what we have to offer because we are bottom line, we're a cheaper alternative than lots of other things that they can choose to do. And they're seeing the value of that. They have friends, they have family who have taken holidays with us, and they can champion us on our behalf.
Josh, so appreciate it. Have a great summer. Josh Weidenstein, he's president and CEO of Carnival Corporation, joining us there from their headquarters in Miami.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Plenty ahead in our second hour of the weekend edition of Bloomberg Business Week, including trading a job on a London trading desk for one as a whiskey distiller. We'll reintroduce you to the founder of Natterjack Irish Whiskey, whose happy accident led to an innovative new blend.
Plus the really, really expensive Bugatti supercar, that's also a hybrid, the CEO breakfast diet, and the former long-running Broadway show Cats gets another life courtesy of Wild Costumes. It's all ahead in Bloomberg Pursuits.
First up this hour, we begin with music and entertainment. The Las Vegas residency, an extended run of concerts by a single artist, has never been hotter. On any given week, fans can choose from an array of shows that might include Adele with a string section at the Caesars Coliseum, Lady Gaga performing jazz standards on a piano at Park MGM, or Carrie Underwood belting out her country hits at Resorts World. Oh yeah, and then there's The Sphere, with U2, Fish, and Dead & Company taking up residencies.
It wasn't always this way. Las Vegas, at least in the words of one Las Vegas historian, quote, was the place old performers go to die.
Ouch.
Bloomberg News entertainment reporter Chris Palmieri writes all about the Las Vegas residency. His story in the latest issue of Bloomberg Businessweek magazine, also on the Bloomberg terminal and at bloomberg.com/businessweek. So to understand how it got to be this way, we've got to go back in history from the days of Elvis and another surprising artist.
It starts with Liberace, believe it or not, who was a big star on TV, and he was lured to Vegas, a $50,000 a week contract. This is in 1955. Wow. And just, makes it a thing to play there 5 nights a week. And that really establishes this idea of the star in residency, playing one place. You want to see him, you go to Vegas. It's a big thing, and then of course you hit the tables afterwards. And it inspired Elvis, who bombed in his first Vegas experience with a big band, a comedian, and but studied Liberace and his showmanship and his outfits, and came up with his own Vegas version, which of course we all remember. And, the Rat Pack was, Sinatra, Dean Martin, Sammy Davis. They were a residency in the 60s. And then you kick it to kind of the modern era of Celine Dion in the 2000s. She opened the Caesars Coliseum. That was a huge deal, $100 million. That really opened the door for all kinds of folks like Cher and Elvis, and now we cut to Adele, and the whole idea that the Vegas is where these sort of old stars went is no more.
Well, it's so wild. I mean, I was thinking about this, Chris. I mean, how much is it kind of the evolution of Vegas as a place to have great food, go see great shows, like really experience a lot of pretty cool things in kind of a relatively small area? How much of it is it too performers just tired of going on the road and they're like, let me do this gig for a while, make a bunch of money and then be done, but I don't have to like get in my tour bus. I don't have to get on planes. Like I'm just curious how it's all coming together.
Some of them have bought homes in Vegas too, and sort of settle down. We got started in this because, as you mentioned, Vegas always reinvents itself, and the Sphere, which opened in September with a residency of U2, really just set a new bar for entertainment. A lot of people were skeptical about what was going to happen there, but it's just so mind-blowing, the experience of the video indoors and out on the entire theater. And so that sort of was like, well, this is sort of the new version of the residency. Got us thinking about that. And then I was surprised, actually, being a long-time concert goer, that this actually translates into Vegas having the highest average ticket price.
I was shocked to see
in
that.
The country. Yeah.
Yeah. Okay. So,
how
I have a
expensive
couple.
Is it?
It was $176 on average. It's a lot of money. Yeah.
It's no Taylor Swift, but
But
that's one thing that's always struck me about Vegas is everywhere and I've been there many, many times, mostly for work. But one thing that I'm always struck by
is a lot of tech conferences used to be there, right? Like all the time.
Everything was there.
Yeah.
At CES every year. But what always strikes me is the way that people throw money around in Vegas. It's like this fantasy world, because the people who are throwing money around, they're not throwing money around like that every day when they're at home. And I'm wondering what it is about Las Vegas that can attract such high ticket prices.
Well, that's number one. People are going there. 40 million people last year going there to have fun. You're not going there to visit relatives for the most part. You're not, you are cutting loose. And sometimes you're cutting loose with a corporate credit card too, like you mentioned, going to a conference of some kind. So the city is designed really for that. So if you're not going to gamble, you're going to eat, you're going to see a show, shop, you're spending money. The other thing is that these residencies tend to be smaller theaters. Some of the acts, like we really featured Christina Aguilera. She's somebody who could play big arenas. She's playing at 1,000-seat theater at the Venetian, which was configured to kind of be like a Parisian nightclub, and it's got mostly table seating. In addition to a pretty high ticket price, you also got a food and beverage minimum, $250 a person. Which sounds like a lot until you until you sit down in a nightclub in Vegas.
Food and not beverage.
And it's just play money at that point. And so that's the experience she's going for. She told us, everyone could feel like a VIP, and people are buying it.
Yeah, Vegas is the place where the ATMs only spit out $100 bills. You can't choose 20s when you go into the ATM.
Size and scope.
Yeah.
Or perspective. No signs of anything slowing down in terms of these types of performers coming there and more residencies to come, essentially?
Yeah, no, it certainly seems that way. People are lining up to get into the Sphere. The city talked about its first hip-hop residency this year. We have, still huge artists, Lady Gaga, Adele. And the next thing we asked around about seems to be, you're familiar with the ABBA show in London,
yeah.
The Avatars, sorry. And it's probably going to be something along those lines. Maybe it'll be Kiss. Who knows?
Unbelievable.
But yeah.
Very cool.
So, and you're right. The city reinvents itself. It was Cirque du Soleil for a while.
Got it.
Now it seems sports and residencies.
Very cool stuff. Chris Palmieri, thank you so much. Really fun to check in with you about this story. Bloomberg News Entertainment editor. Check out his story at Bloomberg.com and also on the Bloomberg terminal. You're listening and watching Bloomberg Businessweek.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
All right, Tim, here's a pop quiz for you. Okay. What do Enrique Iglesias, Blake Shelton, the rapper Future, and the rapper and producer Logic all have in common? Don't cheat.
They make music? Is that good? They have a Las Vegas residency? Is that right?
No.
Okay.
Come on. You know this one.
Okay.
They've all sold their catalogs.
Oh, yeah, I wrote that, so I should know that.
Sorry, guys. We tried to make this work. Or stakes in their catalogs they have sold to Influence Media Partners, a $750 million fund backed by Warner Music and BlackRock that invests in music IP, intellectual property.
It's been a growing trend for musicians lately to cash out on their work. For the companies purchasing the catalogs, it may be worth the investment. For more, we were joined by the founder and co-managing partner of Influence Media Partners, Lolette Pizarro.
This has been probably the healthiest we've seen in the last few years in single artist acquisition opportunity. What's gotten really interesting about the market for us at Influence is that artists really do care about partnership. NIL has become a very vibrant space.
Name, image, and likeness is what you're referring to.
Name, image, and likeness. And, when I wrote this strategy a few years ago, I wasn't quite sure if the active artist, an artist who has a manager, an agent, a really, significant bench of talent would allow us to invest in their name, image, and likeness rights. But
well, help us understand name, image, and likeness when it comes to these artists, because we talk a lot about it in the context over the last few years of athletes in college who are now able to license their name, image, and likeness. How does it work in the musician space, in the artist space?
Everyone has a different approach around how they manage name, image, and likeness rights. I can tell you what we do at Influence. As it relates to Influence, we approach it as an opportunity to invest in a specific vertical of rights. So we look and we learn, we do insights work around how the artist has commercialized their name, image, and likeness rights historically, and what might be a white space. So it could be wellness or hospitality or film and television or an area that they haven't really explored, but there's interest in exploring. And we'll approach it around taking a position on those rights exclusively.
Isn't that kind of what an agent does?
We partner with the agents very often. So I would say we look more like a marketing agent, which is more classic in sports and doesn't exist in music. And I feel like that's the white space that Influence is really owning. So a marketing agent who will work in tandem with the television and commercial agent and the touring agent, but we're specifically focused on bringing new marketing opportunities to artists and on a very specific, basis. We also work with artists on non-exclusive rights as it relates to name, image, and likeness. But the proposition, given the type of talent that exists in Influence and the type of marketing DNA that we're bringing in, it's become a very compelling proposition to talent in which now we're being approached just on name, image, and likeness opportunity outside of catalog investment.
That's what I was going to ask you. Are there times where a performer says, yeah, we're going to hold on to our music, but can you help us with the name, image, and likeness side of the business?
Yeah, it's just started to happen. It's, we're in early days of, Influence. So we're very much a startup, but it's so exciting and promising to see artists respond this way, see the opportunity and want to lean in on what we're proposing, our ambition and our strategy. I will tell you, Carol, that our marketing pipeline is just as important to us as our acquisition pipeline. We really believe that if you're investing in IP, the best way to protect IP is to constantly drive rediscovery of that IP and make sure that it's at the forefront and there's ways to consistently re-engage with fans and audience. And that is at the heart of our proposition.
It's a $750 million fund. It's backed by Warner Music and BlackRock. What can you tell us about fund returns over the last couple of years?
So we've done very well. I mean, investing in music royalties, as you guys know, it's an alternative investment class, but we've been performing a little bit better than I think the market would say that these royalties or investment in music rights perform. And part of it is because, one, we're highly focused on our value chain proposition. So from sourcing, we really look at, making sure that the seller, so whether it's an artist or songwriter or an entrepreneur, truly cares about partnership and wants to lean in on value creation and marketing opportunities. So it makes what influence invest in a little bit different than the balance of the market.
Right. What can you tell us about like expected returns, though, when someone comes to you it's an alternative asset, as you mentioned, it's an alternative investment?
I think what the market has said about these returns is that they are low to mid-teen returns, and influence is performing better than mid-teen returns.
All right.
All right.
Cool.
Just trying to get an idea of like kind of where it fits, right? You know, we talk a lot about alt investing. So it's just trying to get an idea of exactly kind of where it kind of slots in the investment space. Having said that, I don't know, like how big can it be for you guys? You know, Tim mentioned how much you've got a $750 million fund already. Already 600 million in. Are you getting new investor money coming in to either do a second fund or build out this fund?
Yeah, so our investors are really happy with our performance and are returning to our next vehicle. I think the question always is, what's the appropriate scale for this investment class? And we're working to define that as well. Look, we see ourselves as a premium rights holder of premium music rights. And so we also very much care about having the opportunity to partner and actively manage. And I think we've identified our space in the sub early billions of opportunity for the future. So, you know, potentially a $2 to $3 billion vehicle. I know that there are other buyers in the space who have far larger ambitions, but right now, that's how we see the opportunity at Influence.
You know, there was a period until about 2022, we were talking about this all the time. Kenny Chesney, Leonard Cohen, Justin Timberlake. Those were catalogs acquired by Hipgnosis and Blackstone, John Legend, Bruce Springsteen, Stevie Nicks, Bob Dylan. They've struck deals with other firms. Has the idea of selling a catalog slowed down at all in a higher rate environment?
There has been just as much activity in terms of acquisition, and there has been just as much activity in terms of new entrants backed by institutional investors. But what has shifted is the actual announcement activity. And I've been looking and studying that even as us as Influence, we've only announced 25% of our acquisitions.
Interesting. I was wondering about that because I saw the numbers versus who you've announced. But, you know, you say there's more people out there to do the acquisitions, the more institutional money. Doesn't that make it more expensive for you? We only have 30 seconds left, but if there's more places for these artists to sell, doesn't it increase competition?
Yeah, look, competition continues to get more and more competitive around music rights. So what's critically important is understanding your proposition around value creation, being able to have deep trust in the space. You know, sourcing truly matters. So proprietary sourcing or limited opportunity matters and gives you a bit of an advantage. So yes, as it continues to get more competitive, being able to be thoughtful across the value chain is critical.
Listen, really appreciate you being so real and transparent. Really fun to talk with you. Lilette, take care and look forward to hearing more in the future. Lilette Pizarro, she's the founder and co-managing partner of Influence Media Partners, joining us right here in New York City.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, everybody, there is Scotch whiskey, U.S. whiskey, Canadian whiskey, Japanese whiskey, blended, Tennessee whiskey, single malt, and more.
I didn't know that. That's a lot of whiskeys.
I have to tell you, all I know is I like a good whiskey sour. That's all I know. The global market for whiskeys is valued at approximately $140 billion, according to Euromonitor International. Our next guest last stopped by on St. Patrick's Day, and shared his story and shared some whiskey.
Back with an update and how a recent mistake actually turned into an opportunity is Aidan Megan, founder of Natterjack Irish Whiskey.
Look, we've been traveling to anyone who will have us to go and promote the whiskey. We're now in 14 states in the US. We'll be in 20 by the end of the year, and then with a bit of a tailwind, 25 by St. Patrick's Day when we open up New England. So it's just been incredible. The reception to the whiskey's been great, and we got national distribution through Total Wine & More, which was massive because we won Irish Whiskey of the Year for 2024.
Those recognitions are important, aren't they?
They are, yeah. Yeah, and the previous winners are like the massive. They're like like the 2022 bottled at one is a 30-year-old Irish whiskey, and it's $2.5 a bottle. Ours is 80. So you talk about value, and everyone loves value, right? It doesn't matter who you are. So it was really just an incredible award, and it was really well taken. It opened up these kind of chains, and we've just opened up a big chain in Texas as well. I think we've got a good story, but people are like, where can I buy it? And it's really frustrating when you're like, well, there's local liquor store on 6th, and you're just like, that's not a compelling story. So this changed this year. It's been amazing.
So talk about that process of going state to state here, because I think a lot of people who've lived in different states might understand that local and state liquor laws vary drastically across borders.
Absolutely.
So it's really tough on a distribution level, especially if you're a small independent player, to succeed here. How do you do it?
So you partner with, in our case, I can only speak to our case because we're not with one of the big distributors. We're with individual distributors in each market. So what we do is we educate them, we incentivize them incentivize them by bringing them along in the journey, right? So meet them, spend time with them, spend time in market with them, telling the story, so that they can then effectively tell the story as well.
That's a slow process.
Oh, it is, absolutely. I think I was home 2 days in May. So you're on the road. It is pounding the pavement, but that's actually what we've got to do. But then you add to the team, right? So we're now up to, we've 8 reps. We've a national sales director. We're just about to hire a national marketing director. We've got 3 people in Ireland. So it's a lot of pounding the pavement. But as you scale, you get them to tell the story, and they can educate people.
And I want to get to the story, but Aidan, I do feel like it's a moment in time, or has been for years, that in the liquor market, the alcohol market overall, that upstarts, newcomers can really find a niche for themselves, that people are interested. I think consumers are looking for different choices.
They are, and they're looking for authenticity as well, right? And I think at the larger brand level, that authenticity doesn't speak to someone who's into the process or into starting a business or those sorts of things. They struggle with that. So for a brand like ours, it's an amazing time to be able to actually go and meet the people and tell them our story.
Talk to us though about your story. Remind our world.
So I was an equity trader in a hedge fund back in 2015, I think, was when I kind of had the moment. I was like, look, is this everything that I want to do with my life? Like, I loved it. I think I was okay at it. Like, I had a decent career. And but I was like, I wanted to build something. I wanted to build a business. Now, I was running the business with my partners and that sort of stuff, but I was like, this is the time for me to go do that, right? I had no real responsibilities at a house. I sold the house and moved back in with my parents, which they were very good to take me in for a couple of years. And
that was your seed money?
That was it. Yeah, I sold the house, and that was how much is this going to take? Turns out it took a lot more time, a lot more money than I ever fathomed. But then we got outside investment, and our investors are based out of Michigan. And so the first thing I had to do was I had to build a team. So I found Jordan Via, who's our distiller. I found a team of industry guys to help me, because I had no idea what I was doing. And in some ways I still don't.
How do you do that? Or is that just the trader mentality of, I don't know, let's figure it out
on the go, right? Yeah. So I found actually my first business plan recently. It's dreadful. Like, it is absolutely horrific. So you go and you learn, right? And so the business plans, as it grew, it kind of became its own kind of thing. And then what I didn't want to do was what a lot of my peers had done, which is release a vodka or a gin. And that was I did know what I wanted to do was very clearly. Easier? Yeah, you and I could have a gin in 12 hours. So it could
get a bathtub.
Tim and Aidan's gin, boom. Yeah. Right. So
I know what Tim's not doing over the weekend.
So I needed to. But I wanted to do whiskey. So then we had to source whiskey. But this is back in 2015-16. There wasn't much available from a sourcing perspective. So I got offered 2,000 liters of 8-year-old double distilled, and I was like, I could buy that now. I've got the capital, and we can take it to market. But what happens then if it's a success? I can't get any more of it. So then,
because they own it.
No, that was all that was available. I couldn't get a supply contract.
Yeah.
So I learned that I wanted a plan for scale. That I wanted to go for something that could really take off, and if it takes off, that there's not going to be any breaks on it. Because what I didn't want is to have a huge success and be like, okay, you can have some more in 5 years when everyone's forgotten about it and you sit around going bankrupt. So we held off until we could get that proper supply contract that would allow us to grow, and we've now secured 5 years worth of what we need for the growth trajectory that we're on. So it's been amazing. But that meant we had to push it back a year. And that's a year, don't forget, of me in my parents' basement. They're like, what are you doing? And I'm like, well, I can't
How old were you?
Yeah, love you.
35.
I'm not being judgy.
No, 35. It's like...
Sometimes that's what parents are for. They take you in when they need to.
Well, exactly. But then I met my wife and I was like, I need to move out.
You can't go back to the parents' house?
You can't, no.
Hey, but she loved you then. So
yeah, right.
That's a big deal.
Exactly.
But you also had to deal with the pandemic.
Yeah, and that put us into a kind of a tailspin, right? So we had initial investors who weren't happy with how it goes. And the weird thing about the pandemic is Pernod Ricard and Diageo, the big companies, were doing really well because they own every part of the shelf. Yeah. So if you wanted a $20 or $120 bottle or $2,000, they own everything. We had one SKU. Right, so it's like, who's taking a punt on a €50 bottle of whiskey? Because we got the pricing wrong as well during the pandemic. And so sales slowed, but they actually continued in the US. And because we pivoted a little bit we were able to pivot because of our display box into the off-prem. The US, by the end of the pandemic, we were in kind of 9 states. And that was pretty amazing.
Wow. Which really kind of gives you some momentum, right?
Yeah.
On the other side.
When you expand to a new state, how much do sales grow?
At the start, very small. You've got to program. So
it's not just being available, it's about educating the folks who are around.
So you
those
do
areas.
shows, we go to shows, we educate, we do staff trainings in chains of bars or in
because
the
bars have got to be huge,
yeah,
right?
And you try and get onto cocktail lists, and then you try and get the placement in the right place behind the bar so that people can see. Because the Toad, people do call out the Toad. So
yeah, the Toad on the bottle.
I gotta say, there are times I'm buying wine, I'm like, I kind of like that bottle, what it looks like. Your bottle is pretty cool, and we're going to get into the Toad in just a moment because you guys have actually been doing some really honorable stuff around that and making sure that the Toad stays around for a long time. You brought us something. We want to talk about the mistake.
Yeah.
What is the mistake?
So our blend, for blend 1 and for cast strength, it spends 3.5 years expert and 1 year virgin oak, right? So I thought we'd taken out in 2020 our blend 1 blend and put it into steel containers for the next time we needed to do it. The pandemic was on, we didn't have a huge need for whiskey. So about a year later, I called up the guy who'd done it and I was like, where's that whiskey now? And he's like, well, it's still in barrel. I was like,
what?
No. We can't take. So I was like, well, what are we going to do? Because I can't sell that as Natterjack, and I didn't have a brand for it. So I was like, okay, so we left it. And Jordan Via, our distiller, he tasted it about 6 months ago. And he's like, that is the best whiskey we've ever made. It's incredible. So we said, okay, great. Well,
this is when a screw up becomes a good thing.
100%, right? Yeah. And evolution's full of mistakes. And
that's right.
And everyone was like, okay, let's really market this. We're going to say, this was always your vision for the whiskey. And I was like, but that's bull, it's a lie.
Can I open it and pour some while you continue talking?
So I was like, let's call it a mistake. I've made some huge mistakes in my life. Some of the best parts of life come from mistakes. And I was like, let's just own it. It was a screw up.
Wow.
It was a screw up.
That sounded very good, Carol.
And it is, it's like our whiskey, it's a year older. It's been 1 year longer in virgin.
I'm just going to do a little because I know.
How big of a batch?
46 barrels. It's all sold.
It's all sold.
Yeah.
It was
you can't get this. Huge. You can get some through natterjack.com, and when I say it's sold, it's left hour distribution.
Okay.
Right. So it's still in stores, but we don't have. I haven't seen a bottle since I saw that one today.
First of all, it smells really heavenly.
Thank you. Yeah. So it's really heavy on the oak.
I do.
Yeah.
Okay, glass. So to walk us through it.
So it's a little bit lighter on malt than our original blend, but it's still in there about 17%.
It does smell lighter. Mm-hmm. Yeah, I feel lighter.
And then there's still the char number 4, and still, for me, toasted walnut, a little bit of cinnamon.
It smells so good. So what does that teach you as someone, like these mistakes? So now are you guys experimenting more?
Yeah, we are. We're playing around with it. Well, do you know what it taught me? It taught me that problems aren't only problems if you see them as problems.
That's pretty nice.
Right?
This is why you make mistakes in life, folks.
100%.
So
right?
sorry.
Yeah. Well, so my biggest trading mistake was about Korean won non-deliverable forwards, which cost me my job back in...
Did it really?
Yeah, it did, yeah. I rolled the wrong amount because I didn't know what a non-deliverable forward was. So I now know what a non-deliverable forward is, and I no longer...
So some mistakes can cost a job, some mistakes can
make a great whiskey.
Incredible delivery, discovery.
Yeah. And I think it's our best whiskey. But then also, for our first shipment to China in 2019, big shipment, 1,000 cases. We hadn't had a 1,000 case order. It was first year of the business. Faye and I hand dipped all the bottles in black wax, and they all got sent to China. But they went through the equator, which is 50 degrees. Liquid expanded because it's hot. Wax weakened because it melts.
Cracked. Yeah.
And so all the bottles opened. So it got to China and they said they opened it and it smelled amazing. There was no whiskey. So it was all open. So we turned that was a mistake.
Yeah.
We turned that into Mr. Wang, our Chinese distributor, came in and he was like, are you going to cover the cost of this? And I was like, no, you got insurance. He's like, my insurance doesn't cover wax melting and liquid expanding in the equator. And I was like, okay, if you triple your order, I'll cover the cost of the first one. And he's like, done.
Aiden, one thing I wanted to talk about was just the changing view around alcohol that we're seeing here in the U.S. How do you think about stuff like that?
I do think about it quite a bit, and I think there definitely is a movement that way. And look, I think we know that alcohol, in moderation, it's one study one day says it, the other day says
right.
no. But for me, it is definitely a movement towards drinking less and also drinking better. So when we talked about authenticity and knowing the process and knowing the producers, I think that's really an opportunity for us, for people to say, right, well, if what I'm going to have tonight is one whiskey, I want to drink something where it actually means something to me. So it's an opportunity to connect with a consumer, and I think that's how we try and tell that story as well.
You sound like my mother. It's like when you're going to go shopping, like, you know, you're going to buy something, make sure it's something you buy really good and make sure it lasts forever. Like, right, this idea of quantity over maybe quality, just generally, like, you do wonder whether or not that kind of kicks in again. In a world where we are very blessed by abundance, but you do wonder at some point where people are kind of like, well, wait a minute, you know, and certainly in a higher inflationary environment.
I think that's right, yeah.
The Natterjack Toad. First of all, if you haven't seen this bottle, I'm going to take a picture and tweet it out, but it makes your bottle so distinct. Remind us about the Natterjack Toad.
So the Natterjack Toad is the only toad indigenous to Ireland, but it's a very Irish toad. It can't hop, it walks, it can't swim, it drowns. Thank you.
Great?
And it does things its own way to survive. So it's very definite in how it walks. It has a croak that can be heard 2 kilometers away, a mating calling that you heard 2 kilometers away, like some whiskey drinkers. And it's nocturnal like all whiskey drinkers.
Those male toads are so desperate.
There we go, right? But they're, as I say, they're not very good at swimming and they live in pools. So that's not a great combination. Yeah. So what happens is they tend to die off. So they're endangered in Ireland. They're originally from Ireland. They're across Europe, but they're originally from these sand dunes in Kerry. And so we released 1,000 of them. Wow. We reckon about 20% of that will survive, and then next week we do another 1,000. And so they're incubated at Dingle Aquarium, and then they're released. Scott and Stephen were down releasing them into the wild in the west of Ireland.
Portion of your profits too are going.
Absolutely. So we sponsor the program every year. It's a great program to keep them alive, and I think without them, well, this would probably be called Aidan Megan's whiskey, and we wouldn't be sitting here.
Listen, we love talking about it and love hearing your journey, and we love hearing about the mistake.
Thank you.
That's really kind of fun. Looking forward to what comes next. Be
Definitely.
well. Have a great weekend.
You too.
Stay safe. Aidan Megan, founder of Natterjack Irish Whiskey, and I'm going to send out a picture in just a moment. Carol Massar, Tim Stenovec, this is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
It's not a V6, a V8, or even a V12. How about, Tim, a V16?
And you've heard of a power lunch, Carol. How about the power breakfast?
Love it, love it. It's just some of what's in the latest edition of Bloomberg Pursuits. Here now is the editor of Pursuits, Chris Rouser. So great to have you here. We do talk about the power lunch, but a lot of executives, right? Like, we kind of, like, sometimes they have power breakfasts. We care what they eat.
That's true. You know, I think actually the power breakfast where you meet people is
That's
like
what I'm
maybe a
thinking
little
about.
on decline. People do maybe power workouts together in the morning. But we started this new series in the new monthly edition of Bloomberg Businessweek, where we talk to CEOs as they come in and out of the offices, you know, as they come on for TV. We grab them as they're hanging out in the green room, and we ask them about their lives and how they go through their day. So, like, what are your workouts? What do you meditate? Like, kind of like what their little life hacks are.
Yeah.
And in the first monthly issue of Business Week, we asked them what they eat for breakfast. And some of them have kind of elaborate traditions. Some people pre-make yogurt smoothies on the weekend, and then they drink them all week, like Chip Wade from Union Square Hospitality.
That makes sense. He's in hospitality.
Yeah.
Like, he needs to sort of be close to the product. And he's spends a lot of time on the weekends juicing, I guess.
Yeah, but then it's not food, right? It's a juice.
It's
an interesting choice.
Liquid.
And one guy, Billy Holt from Tradeweb Markets Incorporated, has turkey bacon, lettuce, on a whole wheat wrap because he doesn't eat eggs and has not eaten eggs since he was a little kid.
He should try them again.
Yeah.
Can I just tell you?
I'm going to
Wait,
just sort of like give a push for eggs here.
Here's a hack.
Yeah.
I mean, Tim, how many eggs do you grab?
I had
Hard-boiled?
3 this morning. Not from here. At home. I made them at home.
Okay, but where do you usually get them from?
Yeah, I get them here.
Yeah. They're like
The
on his desk.
hard-boiled
He kind of
eggs.
hides them like you.
Yeah. Hey, come on.
It's a
I
choice.
hide them not for people to know about it.
Oops, did I say something?
That's a power breakfast.
My favorite response was Kim Mana, who is at Hard Rock, and her answer was, I do not eat breakfast. I drink coffee.
I love that.
Which, respect.
How's your gut, though? That's a little rough.
Listen, all these people drinking smoothies, who knows?
I actually love this. I kind of feel like we should start doing this, Tim, on air. Like, we should be asking, like, the execs who come on, like, what do you have for breakfast? Like, it's kind of interesting, right?
Yeah, pick a couple of standard questions.
So what do you have? Well, you eat.
Well, it depends on the day. You know, I had cereal before the workout and then 3 eggs after. And hopefully I don't get hungry soon.
And then he just kind of eats all day.
Yeah.
Okay, now you're bragging.
Yeah, I know.
Yeah. What do you have for breakfast?
I have a smoothie.
Oh, you have a smoothie?
And tea.
Okay.
I stopped drinking coffee first thing.
Question.
Because?
The smoothie takes so long to make. And then you have
No, I get like a mix, one of those mixes.
Okay. Carol?
I do a buffet upstairs, like fruit, some cheese, some Cheerios.
Okay.
It's so sad.
What's the opposite of bragging? Yeah.
That's so sad. Okay. Where do we want to go?
I want to go to see Cats.
Okay, let's go see Cats.
I gotta earn back some respect from Chris Rouser.
Guys.
Okay, so Cats was on Broadway for decades.
Forever.
Yes.
I even saw it when I was a kid.
Yeah. That's what most people remember it from.
And it was still on Broadway.
It was one of the it was like Andrew Lloyd Webber's first huge blockbuster show, kind of that like synthy. It came out in 1981, and it was such a hit, like kind of a rocky hit. And it was strange, and everyone loved the cat costumes. And honestly, like I didn't see it. I never was really able to understand why everyone loved it.
Wait, you never saw it?
Cats?
No, because I'm not from New York.
You know why? Because
it also doesn't have great buzz. Like, not that many people are like, some people love Cats, but a lot of people are like, that's a bad show. And so it got revived.
The cats came out from all over, like you were in the
I can't believe you never saw it.
I think that's what people like. That's what the only thing that people
they were
like.
crawling all over you.
So it makes no sense.
Okay.
It's just a series of vignettes. The music is really fun. It has obviously memory and some like really incredible songs. It was revived a few years ago on Broadway, and now it's back at the Perlman Performing Arts Center at the World Trade Center, and it is totally reimagined. And the directors and choreographers have placed it in the world of ballroom culture, which is in the 80s and 90s. If you watch the show Pose or the documentary Paris is Burning, it was this underground, queer, black and brown Latinx community where people would put on performances on runways. It's very creative. If you ever go to the Latex Ball in New York, they still do it. And they turned the show into a ballroom competition. And things that never made sense in Cats, like the Grisabella character who sings Memory, all these things suddenly make sense in this new context. And the energy is wild. The audience was screaming on their feet.
I love that.
I can't even tell you. We did a story on the costumes. There are 300 costumes. It's kind of a drag situation, so a lot of them are like tearaway and there's reveals, and it's just a blast.
So do you think this production of Cats makes its way back to Broadway?
Before I went in, I did not think that, because it was made through like a grant making process at the PAC, and it just doesn't have that feel, because it's kind of like arts and craftsy and sort of like duct taped together. Somebody else said to me, this is going to be like seeing Hamilton at the Public.
All right, so now we need to get tickets.
I actually am trying to get tickets right now.
Are you really?
Yeah, I got to go see it now. You sold me on it.
But the designer, like how difficult, I mean, that's a lot of costumes. And as you said, when you're doing tearaways, you got to make sure they tear away at the right time or don't get stuck.
Yeah, so the costume designer is this woman, Queen Jean, and she came up with 500 designs for costumes and narrowed it down to only 300.
That's amazing.
You don't really notice that there are so many, because the setup of it is like people changing and getting on and off the runway. So you don't sort of, you're not like, whoa, that must have been a lot of work. You're just like, this is so beautiful to look at. But the costumes are a huge part. But it's really the dancing and the singing and the performances.
Any cat suits?
There's no ears. There's
No
no
ears.
cats.
No cat
no
suits?
tails.
No cat suits?
Hey Siri, remind me to get tickets to Cats.
Okay.
Tim.
I'm at it.
Oh my my God. Were tickets expensive?
They have dynamic pricing. So now that the positive reviews have come out, it is a little bit more expensive.
Yeah.
So buy at the end of the run, and it's extended, and then it's going to extend again, actually.
Well,
So-
I'm looking at the
How long
website
does
right
it
now,
run
and it
for?
doesn't say they're all sold out, which is a
It's
good
not
sign.
sold
Like,
out,
this is the
yeah.
first time I'm actually going to be able to get tickets to something, because every time I hear about something, it's already sold
Well,
out.
how long is the run? What does it say?
It says till August 11th on the website, but is it going to extend more than that?
It already extended to the end of July. Then that's, I think, another extension. But I do believe it's going to extend even further.
There's a couple shows that I feel like are legendary. That one, and then like Phantom. But I remember seeing Phantom when I was younger, and then we took like my daughter and my nieces, and they were probably like in middle school, and they're like, you realize this is about a creepy dude who kidnaps a woman and keeps her in the dungeon. Why do you think this is good that we see it?
All right, let's talk about cats.
But it's Phantom. By the way, all of those costumes are machine washable, which I think is kind of.
There you go.
All right, now machine washable.
Okay, we can afford tickets to Cats.
Oh, yes.
Okay.
We cannot
afford
a Bugatti Tourbillon,
Yeah.
which is a $4 million hybrid from Bugatti, which is one of our favorite supercar brands.
Oh, I didn't know that.
Yeah, we just love it. It's
Okay.
these cars
Looks
have
so amazing.
like a crazy horsepower, can go crazy fast, but they're actually also they're also completely unaffordable to any normal human. But they have Hannah likes them because Hannah, our car critic, likes them because they are kind of luxe on the inside too, so you're having a great like comfortable experience inside. There's cup holders and stuff, whereas some of the race cars that she sort of reviews are pretty rough on the inside. Anyway, it's a hybrid, which is their first hybrid, and they have been very famous for doing these like 16-cylinder combustion engines. So doing this new car to replace the Chiron, which is their old top-of-the-line car, just shows that they're now getting into like electric powertrains. It has 3 electric motors, which makes it more powerful. So it has 1,800 horsepower and a top speed of 276 miles per hour.
That is nuts.
V16 with 3 electric motors.
Yeah. I mean, it's a very heavy car, very heavy. And the Rolls-Royce was famous for their W12 engines, and which they are now sunsetting to switch all the way to electric. So this is kind of the movement, and there's a complicated ownership structure, but they're partially owned by VW and then also Porsche and Rimac. And when Porsche and Rimac took an interest in it, it was sort of seen as like, okay, we're going to try to move this company into the future. Because electrics is like a very big priority for Volkswagen.
You know what's great about this car, Carol?
What? Which
it
part?
has Apple CarPlay, which means you can get our program, Bloomberg Businessweek, on it.
You could download this podcast.
Yeah, and listen on
And
Apple
listen.
CarPlay
It's kinda
inside
cool.
the
Yes.
Bugatti.
Inside the Bugatti. You know what? What?
I'm just blown away by that product placement.
So am I reading this right though? It's got a 37-mile range of all electric driving.
Yeah, but that's actually, I know that sounds crazy.
Yeah.
That's not that uncommon because the electric part of the powertrain is for speed and power.
Okay.
You're not meant to drive around just using the
You're not
electric
picking up
motor, really.
groceries
Yeah,
and
yeah,
stuff
yeah.
like that. The other thing is I thought was interesting in this by Hannah, despite the modern aesthetics of the car and the advanced motors under its hood, its interior looks analog. So did she not like it kind of on the inside?
No, actually, that's a really interesting question. We find like that all the digital screens in cars are actually like not what people want. It's,
I agree.
Some cars like Volvo are famously like you have to toggle through screens to get to the temperature and stuff. And like people really like a knob.
Yeah.
You know what I mean? And so Hannah is saying this is sort of a refreshingly analog space where you can look at the gauges, what's going on. You're not toggling through menus. You're not distracted by a bright screen. And it's called the Bugatti Tourbillon because the Tourbillon is a watch feature.
Yeah, talk
which
about
we write about all the time.
The dashboard,
which is so in the weeds, and but it looks like
That's why we love you.
tool on a watch, which is a rotating cage that keeps part of the watchmaking mechanism in a watch rotating so that it does not affected by gravity, and therefore it doesn't become uneven and affect timekeeping, which it is only to say that it's a thing in watches that are expensive and sort of elite and hard to create.
Okay.
And because the engine system in this car was so hard to create, that's why they wanted to call it that.
All right, $4.1 million,
Yeah.
3.9 million euros, if you prefer.
It sounds great when you say it that way.
Okay.
Definitely want to go see Cats. I love that you love, and it just sounds like such a blast and so much fun.
Before we let you go, can you give us some sort of preview of what you're thinking about when it comes to pursuits in the near future, just to leave our listeners on edge?
We have a look in our next monthly issue at a certain kind of like wellness care that is pretty expensive, but also kind of promises to make your life better for longer. And we tested out some of these cool programs to see which ones seem legit.
I love when you guys go into the wellness area. But is it like an oxygen chamber?
Hey, he can't give any more. He can't give any more away.
It's so many things.
All right, we got to run.
A big thank you to Chris Rouser, the editor of Bloomberg Pursuits. I'm Tim Stenovec.
And I'm Carol Massar. Have a good and safe weekend, everyone.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.